Hi there, welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena. And over the next 1 hour, we'll take all your stock-specific queries with our experts on the fundamentals as well as technicals. But before that, a quick look at how markets are shaping up at this hour. Now, Ankita, we have managed to hold on to that 25,000 level, but we're unable to cross the 25,100 level yet again. And interestingly, on the sectoral bit, autos have yet again made a comeback.
Yes, Kanishka, like you mentioned, we have managed to scale this 25,000 levels. Now, yesterday we did manage to close there and we are maintaining those levels. But 25,100 is something that we haven't seen as of now. But we are maintaining that momentum. If you look at the charts also, it's an upward momentum that we see. We don't see any selling pressure come as of now. Maintaining those 25,000 levels right now. So that becomes a very strong support for Nifty right now. As far as Nifty Bank is concerned, that has turned very, very flat, though it has managed to recover from the day's lowest point. It is a recovery of 100 odd points from the day's lows, but nonetheless, it is trading very flat right now with gains of just 0.08% is where Nifty Bank is trading at. As far as the broader markets are concerned, the broader markets have given up the morning gains. Now, remember, we did see an uptick of almost 0.5% coming in the morning, but mid-cap right now has given up those gains. Is trading up a quarter tenths of a percent higher, and small caps also trading with gains of 0.3% right now. So morning gains have been given up, but nonetheless, they are also holding the fort in the green. As far as the sectors are concerned, then yes, auto has come in the fast lane. We did see autos do very well. Then we saw profit booking come in on the auto space. And now, yet again, we see some buying come in on the auto space where Motherson, Eicher Motors, Maruti, Bharat Forge, MRF, these are all trading with gains of more than 1% plus. We also have Nifty Pharma that is doing well. We have Lupin, Gland Pharma that is trading with gains of 2% odd. So on the losing side, we have the FMCG and the PSU banking pack that is reeling under selling pressure. But net, if you look at the market breadth, it is very, even Steven right now as far as the market breadth is concerned. But we do see the defense pack also that is really surging a main trade. In fact, that is one of the top buzzers. We have BEL, that is a top Nifty gainer, trading with gains of 2+%. So a decent day coming in, Kanishka. And now we have Samir who's joining us. The sugar industry also could soon see some relief as the government could approve partially, perhaps lift its export curbs. On this story, we are joined by Samir Dikshit with more details. Samir, tell us, what are you picking up from your sources? All right, so we seem to have lost Samir there. We'll get you back with Samir. But like I mentioned, as far as the market is concerned right now, with the market breadth seems to be very even. The defense pack, like I mentioned, is trading, with gains. The entire defense pack is buzzing in trade. But besides that, we have a couple of other stocks that are doing very well, sitting at their all-time high. Is Bajaj Finance, L&T Finance, Amk Solar, all of these are sitting at their all-time highs today. But now Samir is back with us. He's joining us on the phone line. Samir, take it away.
So yes, we can expect some sort of relief coming in for the sugar industry from the government side. We are picking up from our sources that the government may soon take a call on allowing a certain relaxation on the sugar export and checking the current scenario, the current mathematics that government has. So sources are indicating that the government understand that they will be in a comfortable position to allow certain quantity of sugar export. Currently, if you see the sugar body, ISMA has predicted a sugar production estimate of around 350 lakh tons, and the consumption could be of around 285 LMT. Even for the ethanol diversion, the numbers that it has been estimated is around 45 LMT. So after calculating all these sort of important aspects, government understands that they will be left with roughly around 60 to 70 LMT of sugar, and this will be having a comfortable position not just for the sugar industry but also for the government to allow sugar export to certain quantity. Now, very importantly, we are getting to know from our sources that the sugar export, the decision might be taken up and it could be allowed in two phases. In the first phase, around 5 to 8 LMT sugar export might be allowed from the government side, and this will definitely bring some sort of relief to the industry. Though the industry has been demanding that the sugar export to be allowed to the tune of 20 LMT. So if not 20 LMT, in the first phase, we can see that sugar export can be allowed around 8 lakh metric ton, and then based on the evolving situation, government may look for allowing more export, more relaxation in the second phase. But initially, we may see that a call might be taken up very soon, and the order might be there from the government side by the end of this year itself.
All right, moving on then. Right. Sameer, tell us what else are you picking up? What else are you picking up from this news?
So basically, government understands that in terms of sugar production, actually the production is, yes.
Right, Sameer, can you hear us? Sameer,
Yes, now
so
audible.
this
Now
is going to
audible.
be a major relief.
Please go ahead with your question.
Yeah, so it's going to be a major relief as far as the sugar companies are concerned. In fact, to give a boost to the sugar stocks as well, we did see that ethanol blending, rule also come out, on no restrictions on the production. Going ahead, what can these be a positive triggers for a re-rating in the sugar sector?
So if you see a larger picture, basically, currently the sugar production is the estimates are very realistic. Even government has indicated that the production can be more than what was there in the last year. And for this year, the sugar production might be there roughly to the tune of 350 LMT, which will leave the government in a very comfortable position. Secondly, if you see the ethanol blending target that has already been achieved, the ethanol diversion that can also be achieved very easily. So roughly around 45 LMT of sugar can be diverted for the ethanol blending purpose. In addition to this, seeking the festive season, since the stock is there in sufficient number, the prices in the domestic market, it is also looking very stable and quite in control. So that sort of scenario, that sort of development is giving boost or confidence to the government that they may allow certain relaxation in terms of the sugar export. And this similar kind of situation we have seen last year as well, when the government allowed sugar export of 10 LMT. So once again, we can see that a similar kind of exemption or relaxation might be announced from the government side. And also, this relaxation will help not just help the sugar industry, but this will also help to stabilize the sugar market domestically as well. Because if too much of production is there, too much of stocking is there, then the market crash possibility will also be a strong aspect. And government don't want to be into that situation where one side the stock is way beyond control and the prices are not supporting in terms of co-relevant. So that sort of mathematics that government understand, and seeking that, what we are picking up from our sources, that maybe for this sugar year, sugar export of roughly around 8 LMT might be announced in the first phase, and going forward maybe in next 3-month cycle, that is from January to March cycle, a second phase might be announced based on the evolving situation.
Okay, thank you, Sameer, for getting us all those details. But, the 65th ACMA annual session is also underway, where industry leaders have gathered to discuss strategies for building a robust automotive supply chain in response to the global challenges that we have been seeing. So what are the details that you're picking up on this front?
So ACMA, the Automotive Component Manufacturer Association of India, they are holding their 65th annual session, and this is very important from first point that they are having a theme of how they can cope up with the geopolitical challenges. And the second part is that what is going to be the way forward to build a auto-resilient competitive market for India. India, that how resilient the entire supply chain could be for the auto industry. And based on this theme, this annual session is being conducted. In addition to this, we have also seen that government has announced that they will extend their full support. Even this session is going to have a participation from the key cabinet minister, which includes Nitin Gadkari and Piyush Goyal, though H.D. Kumaraswamy could not attend the meeting because of the vice president election or vice president oath-taking ceremony. So government is extending the full support. Now, most importantly, this entire development is taking place at a time when government has already announced the GST rate rationalization and the GST on the auto component, it has been reduced from earlier 28% to just 18%, which definitely will bring some sort of positive momentum for the auto industry. And they are quite confident that this will not just to push the auto industry and booming the entire economy, the ecosystem, but this will also help to further push the Make in India mission as well and give more.
All right, with that, it's time for us to slip into a short break. Don't go anywhere after the break. We'll get you more updates on the other side. Stay tuned.
Hi there, welcome back to ET Now. You've joined us live from the SBI Live studios and you're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena. But before we get started with all the queries, here's an exclusive roundup of the week's key developments from Maharashtra in our special Maharashtra 360.
Welcome to Maharashtra 360, your quick weekly roundup of the stories shaping India's largest economy. From policy and infrastructure to trade, farming and social change, here's what's making news and why it matters. Maharashtra Chief Minister Devendra Fadnavis-led state cabinet has given the green light to a package of metro approvals aimed at easing urban congestion and accelerating mobility across Maharashtra's big cities. The cabinet sanctioned Metro Line 11, the Mumbai Metro 4 extension at a project cost of 23,487.51 crore rupees. In addition, loan financing was cleared for Phase 2 metro works in Thane, Pune and Nagpur, including a Pune Metro's Lines 2 and 4 extensions and Nagpur Metro 2 to speed up construction and connectivity. Maharashtra Chief Minister Devendra Fadnavis praised Prime Minister Modi's far-sighted vision behind the sweeping GST rate rationalization, while Deputy CM Eknath Shinde termed it as a sweetened Diwali gift for the people of India. The GST Council approved a major overhaul of the indirect tax regime by reducing the number of slabs.
ज्यावेळी जीएसटी रोल आउट झाला त्यावेळी लोक म्हणायचे की अडचण होईल, पण ती झाली नाही. आताही मला विश्वास आहे की याच्यामुळे व्यापाराला खूप मोठ्या प्रमाणात फायदा होईल, व्यापार बूस्ट होईल, नवीन रोजगार निर्मिती होईल, लोकांवरचा बोजा कमी होईल आणि अर्थव्यवस्थेला प्रचंड मोठी चालना मिळेल. आणि म्हणून हे सेकंड जनरेशन रिफॉर्म्स करण्याकरता मी प्रधानमंत्री नरेंद्र मोदीजी यांचे मनापासून आभार मानतो.
The new GST regime will have 2 of the 4 existing slabs, a 5% slab and 18% slabs, while the 12% and 28% slabs has been abolished. The government has also introduced a new 40% slab dubbed the sin tax. This includes tobacco products, caffeinated drinks and also super luxury goods. Many items will no longer have any GST and this includes insurance schemes.
ये फैसला आज तक के इतिहास में पहली बार हुआ है और इसलिए ये लोगों के लिए बहुत बड़ा निर्णय है, जिससे छोटे व्यापारी, लघु उद्योजक इनका भी फायदा होगा. यहाँ पर चलन वलन बढ़ेगा, अर्थव्यवस्था बढ़ेगी, इकोसिस्टम एक बढ़ जाएगी, मजबूत हो जाएगी और ये देश की अर्थव्यवस्था भी मजबूत होगी.
In a big move, the state cabinet approved amendments to the Factories Act 1948 and the Maharashtra Shops and Establishments Act. The aim is to strike a balance between operational flexibility for industry and stronger legally backed overtime compensation and consent protections for workers. Now, this move brings Maharashtra in line with several other states that have already raised limits. Daily work hours have been extended from 9 hours to 12 hours. 30 minutes rest breaks are mandated after 6 hours instead of the earlier 5 hours. And private sectors like IT and hotels, the law will now cover only establishments employing 20 or more workers, up from the current 10. Deputy CM Ajit rolled out a district-level development push under the CM Samriddha Panchayat Raj Abhiyan. Under this, Gram Panchayats will compete for village performance awards highlighting sanitation, green projects, women's welfare and sustainable growth. The state has allocated 22,000 crore rupees for the CM Samriddha Panchayat Raj Abhiyan, a 100-day campaign set to begin on September 17th. Under the new initiative, villages will be judged on sanitation, environmental initiatives, women and child welfare and sustainability. A 245.20 crore rupees performance award pool will reward the best village level outcomes. In a key meeting chaired by Chief Minister Fadnavis, Maharashtra's Vision Document 2047 was reviewed. The CM said the strategic roadmap must guide policy for the next 25 years. Deputy CM Eknath Shinde, Chief Secretary Rajesh Kumar and senior secretaries were present at this important meeting. Deputy CM Shinde remarked that the vision crystallizes how Maharashtra should look 22 years from now. The meeting featured presentations on the vision for sectors including water resources, energy, higher and technical education, school education, skill development, social justice, industry, services, information technology, finance, health and tourism. And those were all the news updates we could pack for you in this edition of Maharashtra 360. Until next week, take care.
Welcome back. You're tuned into Buy Now Sell Now with me, Ankita Saxena, and with me is Kanishka Sarkar. And this is the show where we get all your stock-specific questions answered. Please keep sending in your questions. The number is flashing on your screens now, and the stock buying price, the holding period, and your query, and we'll get them answered by our experts. And now we are joined by Narendra Solanki, Head Fundamental Research Investment Services, Anand Rathi, Shares and Stock Brokers, who's joining us, and Osho Krishnan, who's the Chief Manager, Technical and Derivative Research, Angel One, who's joining us. Thank you so much to both of you, Narendra and Osho. Thank you so much for joining us. Let's get going with all the stocks that are the stock questions. We have a first caller joining us now, Suresh, who's joining us from Chennai. Hi, good morning, Suresh. Thank you so much for calling us. Tell us what's your question.
Yeah, good morning, madam. Actually, I have 400 shares of Texmaco Rail and Engineering, purchased at a rate of 234 rupees. Now it is trading much below this. So can I utilize this an opportunity to accumulate some more shares for averaging it?
All right, Texmaco Rail. Is this an opportunity to accumulate more? Osho, tell us if these are the levels that he can get in, and then we'll come for the fundamentals to you, Narendra.
Very good afternoon to all of you. Well, recently the counter has been into a very strong corrective phase, and it is still hovering below the 200 simple moving average. So one should wait for the long-term moving average to get surpassed. Then only one can look for buying or accumulation in this counter. For now, the zones are approximately covered around the zone of 160 to 165. So once it crosses the zone of 165, then the investor can look for buying opportunity in the counter. For the timing, the counter is still hovering with a negative bias, so better to stay sidelines from the counter.
Talk to break out of the moving averages, above the moving averages. But coming to you, Narendra, what would be your take as far as the fundamentals is concerned for Texmaco Rail? Is it a good hold?
Yeah, first of all, let me give you a disclaimer. We do not have any active recommendation on this, but if you see, if I can add something about the sector. So railway sector is one of the long-term growth kind of a sector, and there has been a lot of ordering activity which has been happening in the sector, and medium to long term looks good. But having said that, the execution part remains lumpy for most of the companies in this sector. Hence, periodic volatility is expected to be there for the stocks operating in this sector because of this reason. Hence, if he has a longer term view of 3 to 5 years, then from a sector point of view, he can continue to hold for that kind of an outlook.
Okay, so that's the fundamental view for Tex Macro Rail. Hope Suresh, your query was answered. But moving on to the next query then. This one is coming on MCX. This is Girish Iyer writing from Trivandrum. He's been holding 500 shares of MCX at a price of 8,300. Is there any upward scope in the short term or should he consider exiting? Osho, what do you think?
In the short term, the counter can see some kind of more corrective phase or maybe into a time-wise correction zone the counter can enter into in the very short-term perspective. But from a medium-term point of view, one can still hold the counter. For short-term, I expect the zone of 74, 7,500 to seen as a crucial support levels. If it breaches below the zone of 7,400, then we might see some kind of further corrective phase in this counter. So better to hold with a stop loss of 7,400 from a short-term point of view. But my advice will be to hold it from a medium to long term perspective because for a longer term time frame, one can see a defensive upside movement in the counter.
Right. Moving on to the next counter, from MCX to the pharma pack, this is Ramesh, a buying price of 6,460. He wants to know what's his short term view, Osho. He's clearly sitting at a loss. What should he do now?
See, currently the counter is at a very strong support zone of 200 a simple moving average, which even coincides with the previous or historical consolidation period of around 58 or 5,900 odd levels. So one should stay intact with their investment. I expect that there can be some kind of further consolidation around the same levels, around 5,900. But from a medium term perspective, there is high potential for the counter to see some kind of strong resurgence going forward. So from a medium term point of view, I expect 65 to 6,600 to be seen as the immediate target. Once it sees those targets, then one can even look for opportunity for 7,000 kind of zone.
Okay, so that's the view on Divi's Labs. But moving on to the next query, this one is coming on the auto pack. This is Krish writing in. He's been holding Force Motor shares, 15 shares at a price of 19,100. Narendra is looking for to hold this stock for a period of 1 year. What do you think? Are the fundamentals strong enough to hold this stock for a period of 1 year?
Yeah, auto sector is one of the sector in which we are very positive on, and there are most of the companies which are expected to perform well, and especially the GST rate cut impact is going to increase the demand in the S2. So S2 results would be pretty much better in comparison with the H1 results in terms of both volume. However, coming to the stock, we do not have any active recommendation on this particular stock. So won't be able to say it. But yeah, overall, the auto sector is, we are very bullish on the sector right now.
All right, before we get in more questions, let's take a look at the top headlines for the day. Inflation in the US is running slightly hotter. The CPI jumped 0.4% in August, the sharpest increase since January, lifting the annual rate to 2.9%. At the same time, the Labour Department reported a surprise jump in unemployment claims, but all eyes will now be on India's CPI print, which could have ticked up as base effect fades.
The International Monetary Fund says the US economy is showing new strains after years of resilience. Domestic demand is slowing, job growth is weakening, and a major labor revision found fewer jobs created through March. They warn that Trump's tariffs are adding upside risks to inflation.
The US is warming up to India. Ambassador designate Sergio Gore told senators that trade talks will begin next week in Washington, with Trump inviting India's commerce ministers. State Secretary Rubio reiterated that India is a top partner for America, stressing on defense, energy, and technology ties.
European trade commissioners are in India on a two-day visit to lead the negotiations on the free trade agreement. The goal is to strengthen ties between India and the EU amid differences in duties on wine, dairy, and non-tariff barriers.
Oil prices slide with WTI below the $62 per barrel as weak US demand and supply glut weighs. Gold, meanwhile, stayed near record highs, eyeing a fourth weekly gain. The dollar index hovered at 97.6, pressured by the Fed rate cut bets.
All right, so those are some of the top headlines that we are tracking at this hour. But moving on to the queries that are coming in, we have a live caller, Achar, who's joining us from Tamil Nadu. Hi, Achar. Very good morning. Please tell us what's your query.
Good morning. Good morning. Before I'm placing my query, I just want to make my advance wishes, Diwali wishes, to Team ET Now and the experts. And my query is, I'm holding 1,100 shares of RVNL at 448. At 448. I know in long term it's going to reach 1,000 CMP. But say for 1 or 2 years, whether there is any possibility it may strike the band of 500 or 600. That's my query. And I'm a big fan of Osho sir also.
Okay. Oh, thank you so much for your kind words, Achal. But let's address your query then. Narendra, let me come to you for the query first. Now, from a 1 to 2 year horizon, the caller is looking to hold that stock. But his main query is, when do you think it could cross the 500 level? Do you think fundamentals are strong at this point to cross that level soon?
Yeah, again, we do not have any active recommendation, but yeah, as you have seen that the company has recently won a large order from Western Railway. So ordering activity in the sector is really picking up and is very healthy, and a lot of orders are getting placed. And as and when the execution starts, the revenues would be definitely growing for the company. So I think medium to long term. The sector is very promising, and it can be one can be remain invested in the sector.
Right, so it's a positive view coming in on RVNL from Narendra. But Osho, let me come to you. Ashar is a fan of yours. Tell us what do you see on the charts for RVNL, because this particular stock has not done anything. In fact, in the last leg of rally that we saw, the railway stocks were taking it from the leading from the front. But this time round, we have seen a correction. We've seen at least year to date, the stock is down 21%. From here on, do you see any up move coming in?
See, firstly, I really appreciate for the client for having such faith in me. So that's very thankful for him. And looking at the technical perspective of RVNL, then I expect that the counter is still into a corrective phase, because the majority of the railway sector is still hovering below the long-term moving average of 200-day simple moving average. So I expect that there is still potential for the counters to witness a kind of a positive movement only once it surpasses the zone of long-term moving average. But from a short-term point of view, the support is very nearby. The zone of nearly 300 to 290 historically has provided a very strong cushion to the counter. So I expect that on the downside, there is limitation for the stock prices to fall on the downside. But on the higher end, I expect the positive momentum only to continue once it surpasses the 200-day simple moving average, which is approximately around the zone of 380. So once it crosses the zone of 380, then we can see some kind of positive traction coming back in the counter. And then one can look for even accumulating purpose or even buy more of the counter from a medium to long-term point of view.
Sir, all your questions were answered by both of them. That's a holistic view on RVNL. But let's move on to the next question that's coming in. This is coming in from Kiran, who's writing from Pune. Kiran wants to know the medium-term view for Gravita India. Please suggest the best possible entry level. Osho, for the entry level, we'll come to you. What is the short-term target for Gravita, and what is a good entry level?
See, firstly, the counter is still hovering at a very strong support zone. The support of nearly 1580 to 1600 has historically seen a kind of a strong cushioning to the counter. So I expect that from here onwards, the risk reward is quite favorable in the counter. But till now, the counter is still into a sideways momentum. There has been no positive traction for the time being. So one can start accumulating, but in a staggered manner for the time being, and can become aggressive only once it breaches the sloping trend line, which is near to 1800, 1820 kind of zone. So once it breaches the zone of 1820 on a decisive manner, then one can look for aggressively accumulating the counter for higher targets of nearly 21 to 2150 on a very short-term perspective. And from medium-term point of view, I expect 2350 to 2400 can be seen as the target.
Okay, so that's the view there. But moving on to the next query then, this is coming from Venkat Ramani, writing from Bangalore. They've been holding 50 shares of Dr. Reddy's Lab at a price of 1,200 rupees. They want to know whether they should add more at the current juncture or continue to hold. They're looking at a time horizon of 15 months. Narendra, what do you think? Just about more than a year, what do you think are the fundamentals looking like for Dr. Reddy's for a period of 15 months?
Overall, the pharmaceutical sector, especially the drug makers, have been facing headwinds regarding the uncertainty of US tariff issue. So apart from that, there's nothing wrong with the sector, and the performance has been pretty much good. And we see that the growth, especially in the APIs segment, should be picking up gradually. So definitely, we have a positive view on the stock, and it should perform going ahead in medium to long term.
On from Dr. Reddy's lab to the next question, which is now being sent by a live caller who's joining us, PSN Murthy, who's calling us from Vizag. Hi, Mr. Murthy. Thank you so much for calling us today. Tell us what's your query.
Good morning, all of you. I would like to know CDSL and NSDL entry prices for 3 to 5 years.
For the entry levels for both CDSL and NSDL, Osha, let me come to you. What should be the entry levels? And then for the fundamentals for the next 3 to 5 years, we'll come to Narendra.
See, overall, from a longer term perspective, I'm quite bullish on all the capital market related counters. So CDSL and NSDL both have very strong dominance in the market. So one can definitely look to start accumulating the counters from current levels, because in the past there has been a strong consolidation, specifically in CDSL. NSDL is recently listed company, so I won't be able to judge much on the technical basis. But CDSL has seen a very strong consolidation, and the zone of 1500 1450 has historically also been a kind of a strong consolidation zone. So I expect that from here onwards the upward trajectory is more probable in the counter, so one can look for buying opportunity in CDSL, and via versa one can look for NSDL also to start accumulating at current levels. From a longer term perspective, I expect that both the counters have a strong potential to outperform the market.
All right, so both counters have strong potential in the long term, but let's also take a look at how the fundamentals are. Narendra, what is your view on the fundamentals for both CDSL and NSDL?
We don't have any active recommendation on both, but yeah, as a sector, the capital market segment, we are positive on this segment. And if you see overall growth numbers for both these companies have been encouraging. And earlier they had some kind of a overvaluation kind of a concerns, but with the recent fall in the prices, the valuations have also the overvaluation has also corrected somewhat. And going ahead, I think we are seeing growth coming back to this sector, and from medium to long term perspective, the segment really looks very good, very effectively placed for the long term growth.
Positive view coming in on the capital markets theme. I hope your question is answered. Thank you so much for joining us. Then let's move on to the next question that's coming in from Leena, who's writing in from Kolkata. She says she wants to buy L&T Finance and AB Capital. She wants to hold it for the next 12 to 18 months. What should be the target price that she can expect? Osho, for targets, L&T Finance and AB Capital, how does it look to you on the charts?
See, both the counters are looking very positive to me. Both the counters has been into a very strong secular uptrend, hovering in the cycle of higher highs. So for LTF, I expect any dip towards the zone of 220, 225 should be auguring well for the buyers. By looking at the momentum in the counter, I expect that there might be possibility of some time-wise corrective phase, but on the higher end, the stock has potential to touch the zone of 250, 255 on a very short-term perspective. So one can definitely look for accumulating basis of LTF, and even for AB Capital, I expect that the counter has been seen a very strong movement in the recent period, and it is well placed as compared to LTF. So I expect that in the short term perspective, 320 can be seen as the first target for AB Capital. Once it surpasses the zone, then we need to again review, but I expect 320 will be the immediate target. And after that, 345.50 can be seen as the effective or immediate next resistance in AB Capital. So both the counters are looking very positive. One should start accumulating from current levels.
All right, so positive call on the technicals for both AB Capital and L&T Finance. But moving on to the next query then, we're now joined by Abhinav Kumar Srivastav on the phone. Abhinav, very good morning. Thank you so much for joining us today. Tell us what's your query.
Ma'am, good morning. Ma'am, I have some Vardhana Motherson at 1650 shares at the price of 91 and Motherson Sumi Wiring at price of 49 average. And I wish to hold them for next 15 to 20 years. So what are the view on it?
Okay, so that's a really long period of time. Narendra, let me come to you. Samvardhana Motherson and Motherson Sumi, what is your fundamental view on both these companies?
As we are very positive on auto and also on auto ancillaries space, the long-term growth remains intact, both for India as well as exports markets. And the share of exports also we are expecting to increase in auto ancillary space of Indian companies vis-a-vis global peers. Coming to the stocks, we do not have any recommendation on both these stocks. But having said that, I think there are medium-term challenges in terms of global supply chain issues and export markets, especially Western markets, developed markets, not doing really well. So that has been the major headwinds for the company. And once those challenges resolve, then there's I think the growth would be coming back for the company from the export markets. And with such a long horizon, I think definitely from a corporate governance point of view, the company is one of the best companies. So definitely you can continue to hold it for the long term.
I hope your question was answered, and thank you so much for joining us on the phone line. But let's move on to the next question that's coming in. This is coming in from Sanjay, who's writing in from Bangalore. He says he is a regular viewer of Buy Now Sell Now. Thank you so much, Sanjay. And he's bought Shipping Corporation of India at a buying price of 82 rupees. What can he expect in the short term as he needs to switch? Does he need to switch to some other stock in the same pack? Oshu, Shipping Corporation of India, 82 is his buying price. He's clearly sitting at a profit. Time to book out his profit or and probably look at some other counter, or can he hold it for a longer period of time?
My advice will be to hold the counter from a longer period of time because the counter was already into a corrective phase, and in the last 2 to 3 months, the counter have started showcasing some kind of a strong resurgence. So I expect that from current levels, the counter looks very robust, and I expect that in the short-term period, the counter has a potential to test the zone of 265 to 70. So one should definitely hold on to the counter. Once it reaches the zone of 270, then again need to review that whether one can hold it for a longer term perspective or whether one can look for profit booking in the counter. So overall, my advice will be to hold. The counter is looking very positive on all the time frame charts.
Okay, so that's the view on Shipping Corporation. But moving on to the next query then. This one is coming from Rakesh Gupta, who's written from Delhi. Their query is on Colgate. They hold 345 shares of Colgate at a price of 3,400 rupees, and Hindustan Copper, of which they hold 650 shares at a price of 350 rupees. They're saying they're incurring losses in both. They're a senior citizen, so they want to know what should they do going forward from here. Narendra, let me come to you for the first for the fundamental view. Do you think it's still worth holding on to both of these counters as currently the viewer is sitting with a loss, or should they book out at their losses at this juncture and invest in some other stock probably?
See, as far as FMCG segment is concerned, in H2 we expect the FMCG growth to rebound, and there we may see some kind of a volume growth coming back post the GST cut. However, we do not have any active recommendation on the stock for that purpose. And again, as far as Hindustan Copper is concerned, the copper prices and commodity prices have been recently increasing, and it is one of the positive tailwinds for the company. So I think it should be he can hold it for some more time so that the price can recover, and then maybe he can consider of exiting it.
All right, so that's the view coming in on Hindustan Copper. But let's move on to the next counter. That is, there is Harish who's writing in from Mumbai. He says He wants your view on Tata Power. So he's not given the buying price or the time horizon. But Narendra, let me come to you for, say, a 1 year period. Tata Power, how does that look to you?
Again, Tata Power, we do not have any active recommendation, but yeah, power sector is one of the sector where we have a very long-term positive view. And if you see overall power and T&D, both segments have been steadily growing. The order books are very healthy for all these companies, and we expect around 6% kind of a CAGR growth for till 2030. So overall, the sector is positive and can continue to hold the strong.
Okay, so that's the view on Tata Power. But we have another long-term query coming in. Not long-term, actually. They want to invest a lot of amount. This is Amit Patel, who's wanting to ask if they should increase their allocation in Dixon Tech at the current price. They're looking to invest 10 lakh rupees. He wants to know whether it's the right time or should they wait for a dip. What's the outlook there? First, Osho, let's get a technical chart check. Do you think it's the right time to allocate more to this stock?
See, firstly, Dixon has definitely seen a very strong breakout on the weekly and monthly time frame chart around the zone of 16,800, 17,000 odd levels. So from there onwards, yes, the counter have surged approximately 1,000 on the higher end. So risk reward is quite not favorable at current levels, but the counter is still very robust, and I expect that on the higher end, 21,000 can be seen as the target in this in Dixon Technologies. So one can look for buying opportunity in a staggered manner. If in future there is any kind of profit booking which can drag the counter towards the zone of 16,800, which is the breakout zone, then one can look for further accumulation in this counter. So overall, from a medium term point of view, the outlook is very positive. So one can definitely try to accumulate even at current levels.
All right, so that's the view on Dixon Tech. But coming to the next question, this is Neha, who's writing from Bangalore. She says she's made 18% profit in Poonawalla FinCorp and Colte Patil. She wants to know the strategy and the targets for the next 1 to 3 odd months. Osho, what would be your targets for Poonawalla and Colte Patil, and what should be her strategy?
See, firstly, for Poonawalla, I expect that the counter have seen a very strong rally from the zone of nearly 280, 300 odd levels. Now the counter has entered into a time-wise corrective phase. So better to wait for a strong consolidation breakout in the counter to track or to get the benefits of the breakout momentum in the counter. On the higher end, the momentum can be seen above the zone of 465 on a weekly closing manner. So one can look for those levels to get crossover, then only can look for buying opportunity. Overall, the counter is into a time-wise corrective phase with positive outlook. So any dip towards the zone of 410 can also be seen as a buying opportunity, with 465 as immediate target in Poonawalla. So this counter looks positive, and one can look for buying opportunity even on dips or on a breakout.
So that was the last stock question of the day. Osho and Narendra, thank you so much for taking the time out and answering all the stock queries. With that, it's a wrap on this edition of Buy Now Sell Now. Kanishka and I will take your leave. Thank you so much for tuning in. Don't go anywhere because Markets at Noon is coming up next.